Hello and welcome to another update video about Fantom. The overall information on the Fantom chart hasn't changed, so that means also our perspective has not changed. And the perspective was that we topped here in an A wave, which was here on the 3rd of February. So this was only a 3-wave move to the upside, not a 5-wave move. So it's a less probable setup, a less clear setup in comparison to some of the other charts we have. We came down in 3 waves, into which I count as a B wave low on the 10th of March. And then we rallied in what you could consider a wave 1. Came down in a W, moved up in the next wave, and we're coming down in a Y wave. And that could be complete, technically. Yeah, it's possible that this is complete, but it would only be possible if wave 1 itself is a leading diagonal. And that in itself makes the whole thing generally less likely because, first of all, having a WXY is already a less likely scenario. And then having a wave 1 to the upside as a leading diagonal in a wave 3 is also not what you would necessarily commonly expect. And then we've already in this possible wave 2, which is a 3-wave move, which is good, but we've come down so much that we nearly invalidated it. But it's still a possible 1-2 setup, okay? Which means as long as we're holding the Sunday low or Saturday low, which is at 35.4 cents, you might hear the dog running around here, at 35.4 cents, we can focus on higher, but it's not highly probable at this stage. However, if we are breaking above the 39.4 cent level, which is the wave 1 high, and I've just provisionally labeled it like that, it's not that I believe this will happen, but it's a potential we can track based on a possible 5-wave move to the upside, even though it was just a leading diagonal, and based on a 3-wave move to the downside, which, however, came back deeper than it would be ideal, right? So the probabilities of this working out are not great, but it's still a good reward to risk ratio from here for a possible 3rd-wave rally. If we rally from here, then this small 3rd wave should take it to the 1.618 Fibonacci extension, and we talk here at least, yeah, and we talk here about 42.3 cents. Now, of course, it could be, because any leading diagonal can be typically counted as correction as well, that we will get another low. And to be honest, we're not far off from doing that. And then we just need to see if we can find support here at either the previous 10th of March low, which is at 30 cents, or that larger 78.6 Fibonacci retracement level at 26.8 cents. But that is really the last sort of bullish, reliable option we have. That means ideally, I don't want it to break 35.3 to remain in this wave count I suggested to you. Because if it does, then it will have to reset the B wave as indicated on the chart as an alternate B. And if we have to reset the B wave, then it's an AB setup, which is already less reliable than, for example, a classical 1-2 setup. Well, it can still work out. Just be aware that the probabilities are less clear in an AB setup than in a 1-2 setup. And yeah, you know, and also obviously there's really only then one bullish setup left, and that's this one going down all the way to 26.8 cents. If we break below that level, then I think we have a problem, because then we have to look for new bear market lows. I think that's the best way to summarize it here, the situation on the Fantom chart. And yeah, I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.